Hello, everybody. Happy Sunday. I don't know if you've seen the latest news. I'm going to be sharing with you, but the housing numbers aren't getting any better. There's still a very low supply, and interest rates are increasing. So low supply, high cost of homes, and interest rates are rising. So today we're going to have with us Trevor Smith. He is a loan officer out of North Carolina, and he also is a real estate agent with eXp Realty. And we're going to be talking about what's happening with the mortgage rates and how it will affect, if it will affect, his opinion, the housing market this year. So without further ado, hello, Trevor.
Hey,
How are you?
I'm doing fantastic.
Oh, good. I'm glad you're here. So tell us a little bit about yourself, and if the audience has any questions, let's go ahead and have them pop those in here.
So as you mentioned, loan officer out of North Carolina. I'm a retired Air Force fighter pilot and jumped right into the real estate and lending industry and just love working with numbers. So that was a great fit on the lending side. And man, it's just been it's been a crazy ride since getting out of the Air Force. So, but I'm happy to be here and happy to answer questions and do what I can.
Well, fantastic. I have been doing real estate for quite some time, and I have honestly, even when it was the frenzy years ago in 2006, when people were standing in line to buy houses, I've never seen anything quite like this. I mean, we got big offers, don't get me wrong, and there was wild craziness of people putting in over asking price, but they've been putting in an over asking price. They're waiving appraisals, they're waiving inspections. What is it that they're doing? Are they doing anything different with their loan structure in order to get these houses? Is there any special loans that they're trying to get to make them close? Like, what is it that you've seen that's been some kind of crazy things that people have been doing to try to get into these houses?
I think one of the biggest things that we've been seeing is people really trying to take the extra steps to do the full income verification and documentation to get further through that underwriting process. So that way, when we present those pre-approval letters with their offers, they're really bargaining from a stronger position rather than just, you see out there, I'm sure sometimes the generic pre-approval, like so-and-so's pre-approved for $300,000. And it doesn't really specify, well, is that a pre-approval based off of just a conversation they had with the loan officer, or did they actually take the steps to get fully underwritten? Which is really a big thing, especially because I'm sure, as you might be seeing down there, somebody that's looking to sell a house and maybe has to sell a house in order to qualify to purchase the next one. So
I do. A lot of people that are buying a house, they don't realize too that if you are in a tight situation, you can actually get money as a gift from a family member. How much is the limit that they can get as a gift from a family member?
It's going to vary depending on the loan product type. And really there's every situation is going to be unique with those circumstances, depending on their total debt to income ratio, credit score, and there's other factors that go into that. So, but you make a good point in that, a lot of people don't realize that they can use that as a source for their down payment to assist with that. So it's important to reach out to the lender early to have those conversations to determine where is that money going to come from. Because a lot of people just assume, well, hey, at the last minute, grandma can give me $15,000 and we can make this happen. But the reality is there's certain things that the lender is going to have to document to verify that it is a gift with no expectation of it being paid back. Or the money is going to have to be what we call seasoned, meaning it's been in your account for a certain amount of time, typically at least 60 to 90 days prior to using it for a purchase.
Yeah, and that's a real thing, because I did have somebody, they didn't quite understand, and they thought that they could walk in, with a suitcase of cash and, bring in the money. And I'm like, no. That has to be seasoned funds. And he was like, what are you talking about?
Where did this come from?
Yeah, there was a language barrier. We got it all straightened out, but it did delay the closing. So just, just know that
we don't like those surprise suitcases full of cash showing up at the last minute.
No. And and if you're going to get a gift, if you're getting a gift from a family member, just know it has to be documented that you are not paying it back. It's not a loan, it's a gift, because it makes a difference. And nowhere in this letter does it say at some point they're giving me back this money at all. It has to be a full-on gift. Eddie, if you want to go ahead and throw up one of these questions. Hey, Katrina, it's Kristina. You're awesome. Palm Harbor Homes, Platinum Homes, Deer Valley Homes, and Kentucky Dream Homes are not available in Maryland. Why not? Well, every state is going to have their own group of manufactured home companies that have been approved for that specific state. And it's actually up to the company itself. Even though they're large companies, they may have just not met their qualifications and approval process to go ahead and start to build or actually deliver homes in that specific state, because that could very well be the reason. Or they just didn't want to sell there. I mean, it's a company, and they may have found that it wouldn't behoove them to have a large presence in that specific area. So that's something to look at. Okay, question. How do you take the steps to fully get underwritten? Go ahead there, but go ahead, Trevor.
Sure.
Handle up on that.
The easiest thing to do is start that conversation with your lender early and say, hey, I want to do more than just get a simple pre-approval. Pre-approval is where they're going to run your credit score, and they're going to ask you, how much do you make, each year, and how much do you have in savings, and they're going to take a look at your credit report to see what debts you have to do those calculations, and to just let them know, hey, I want to start providing you the documentation of my income and things like that to take those steps to get fully underwritten, at least further along in that process. And then typically what most lenders are going to have, they're going to have a website that you're going to be able to go to and then upload documents to verify the income that you earn, the assets that you have, whether it's a savings account, mutual funds, things like that. And then they'll kind of go from there, and they'll walk you through the steps, because each lender is going to have a little bit different checklist for that process.
Would there be any reason that they're like the house would be the problem why somebody couldn't get a loan? Like, it's made it through inspections, made it through appraisal, but would there be something that when they're getting approval, there could be something physically or something wrong with the house itself that it would not allow the house to close? I always wanted to know that. Is when they're doing the underwriting, do they underwrite the house too?
Well, when they do the underwriting from that perspective, we're talking about somebody has a contract to purchase now, so we have a physical address. So especially on things like a VA loan or FHA, USDA, non-conventional loan types, there's different criteria that need to be met for that house. And that could be something related to septic versus sewer. It could be related to kind of a termite inspection, would destroy an insect stuff. But each of those loan types, when they do the appraisal, will kind of underwrite that process as well, looking at those things. But at the end of the day, the way I kind of explain it to people, especially for VA loans for veterans, because I know there's a lot of, things are never going to pass the VA appraisal. At the end of the day, the VA appraiser, if he finds something that's, not meeting standard on the house, he's really saying this is not really a safe, livable house at this point, which as a buyer today, you're probably, your agent is highly recommending you get a home inspection anyways. And that home inspection is going to find more stuff than a VA appraiser might find. So ultimately, they're working in your best interest to ensure that the house is safe and a livable condition.
They're giving you the opportunity to fix it. They'll tell the sellers, like, this doesn't meet VA requirements. You can have it fixed and we'll come back out. And most times here, I don't know about other places, but most of the time the sellers will fix it just so it will meet the financing part of it.
Sure.
So Eddie, if you want to throw up another question, here we go. Question: do you feel it is a poor financial decision to buy a tiny home but not own the land? I think that anytime that you own any structure that you plan on living in, that the best idea is to own the land underneath it. The reason being is if you're renting that land, the landowner himself or herself can raise that rent at any time, and if it's attached to that piece of land, let's just say like a lot of manufactured homes, it would cost for you to remove it. And that costs tens of thousands of dollars. So if they're raising the rent so high that you can't live on their piece of property anymore, and your house is attached to the piece of land and it's going to cost you tens of thousands to move it, that really, really, really sucks. But if you owned that piece of land and what you would have paid, that payment is only going up microscopically in comparison because of the fact of taxes. Things change with taxes and they'll go up a little bit. And then it becomes your property. It belongs to you after 20, 30 years. You own a piece of America. You never can go wrong with owning a piece of land. I think it's a much wiser financial decision to own the land that you live under when you buy a property that you plan on living on. Now, if you're traveling the world, and you're just planning on taking your little tiny home and it's the one on wheels, like a PMRV, and you're not planning on putting it in place and making it a permanent dwelling, travel the world, rent some spaces, go to as many RV parks as you want. Then that makes financial sense. Was that too long-winded? I got it over yet. Yeah. And well, the thing is that manufactured home parks some of them have been bought out. The small mom and pop places that have been well taken care of have been bought out by big companies, big corporations. And when they go in there, they intentionally raise the rent to get the people that are living there out. So a lot of people are on fixed incomes, especially when they're retired. So they have no choice. They have to leave their home behind because they can't afford to pay the rent that's underneath it. And what they do is the people, the parks that own it, they know they can't move it. And so they just clean up it up and start renting it out or resell it. And that's there's a guy, his name is Frank Rolfe. And he says that owning a mobile home park is like having your customers chained to the booth. He's not a very good person. That's his whole spiel. Not a nice man. It's a real thing. He really did say that. he teaches people how to do it. It's a mobile home university. Mike Lynch says pre-approval is not worth the paper it's written on. You need a commitment letter instead. Underwritten. Commitment letter instead. Well, I think you missed a word. Yes, that makes sense.
Yeah. I mean, and that's essentially what I'm talking about. When you're going through the underwriting process, every the terminology on that letter that you're presenting, you want to make it clear that the lender is committed to that to that loan because they've already gone through those steps of fully qualifying that individual, not only in terms of the income that they're making, but the assets that they have and all the conditions that need to be met to satisfy that loan. When
I just had a buyer that her commitment letter was probably the most thorough I've seen in a while, because it used to be just this little paragraph, yes, they brought me in the paperwork, we're good kind of thing. And they kind of just expressed what kind of interest rate they would have and, the terms of the loan. Very, very simple. Well, this one had a full down breakdown. It was this is her name. These are the papers she's brought in. These are, this is the things that we've checked. We've, she's already brought in her tax forms. She's approved for this amount of money. We've already they've totally did all this stuff. And I was like, wow, they broke it all the way down, bullet pointed it. I was like, this is the most thorough letter I've seen in a while. Sure. It was great.
And honestly, letters like that, where the lender is providing and validating all of that, if I'm the seller, I'm going to look at that compared to the other offers I might be receiving, because we know a lot of properties today, you're getting multiple offers, sometimes within 48 hours. So, when I have one in the one hand and it's got that checklist and it says, here's everything that the lender has already verified and documented, versus the other generic, hey, so-and-so is pre-approved for $200,000. I'm kind of going to lean more towards the one that I know the lender has taken all those extra steps.
And this is one of those times you really need, if you are a seller, you really need to lean on the expertise of your real estate agent, because we know there's certain there's been certain lenders in our business in the, in our specific area that have been much more difficult to close, that things didn't quite roll the way that they were supposed to. And even though that letter may look good, if they're telling you, look, we've had a lot of problems getting these home loans to close, but there's another offer here, and I've worked with this lender before, even though there might be two identical contracts, I would listen to the advice of your real estate agent, because you want your home to close and close quickly and fairly and on the date it was supposed to, because she already has had that experience. She already knows, or he knows what's going on, and they know lenders. We know them all. We know the bad appraisers. We know the good appraisers. We know the good lenders. We know the bad lenders. So listen to the expertise of your real estate agent.
Yeah, and a lot of times where we see those problems is with the online lenders that don't necessarily have a local presence, or especially in a market where they maybe haven't done a lot of loans in that local market, or sometimes even in that state for some of the smaller online lenders. You run into issues once you go under contract, and now you risk delay in a closing or the contract falling through because the lender made you one promise, and then at the end of the day, they can't satisfy that promise. So what I tell people is try to find a local loan officer. Me personally, I think that's, somebody who actually knows the real estate agents in the area, that has a reputation with them, that is very familiar with the process in your local market is always going to be helpful for you.
Oh, look, Kay Danlin says, she became a new channel member. Thank you so much. I appreciate you being a new channel member. That gives you perks. There is a I'm just going to explain this. We have this thing called a Discord. I don't know if you know what that is. It doesn't mean discourse. Somebody misunderstood me and was thinking that I was saying something where we argue. No, it's actually called Discord, Discord. And it's just a place where you can kind of chat. It's off of Facebook. It's off of Twitter. It's just your own little individual room where everybody can have a conversation with one another about real estate. So now that she's a channel member, she can join our Discord. So welcome, Kay. Nice. I appreciate you. So Trayvon is actually a friend of mine. I've met him before, Trayvon Perry. He wants my thoughts on 3D homes because he's working on them. So I don't know, Trayvon, I've asked you some questions. Have they worked out the leveling of the concrete that's being poured? Have they worked that out? They can't. This is one of those things. I don't know if you know anything about them. Is they're a printer, just like any kind of printer. So, just like anything, if you get the piece of paper wrong just a little bit during that process of it printing, sure enough, your whole piece of paper looks a little off. You're like, why are the words going off like this? Well, it's the same thing for 3D printed homes. And if the ground shifts, the weather shifts, the wind moves it a little bit, then your house is going to be a little off.
Yeah, that's an interesting concept.
Oh, I think it's wicked cool. Once they can get, it's still in the infancy stage. Once they can get that thing, cranked out, it's going to be the perfect solution to a lot of affordable housing problems that we've had throughout the United States. I think the government needs to offer land at a cheaper price for affordable homes for people that are making less than $65,000 a year. And they've done it before. And I'm not saying a handout, so don't even attack me, because I know some people will do that, but it's been done before. So if they would do that. And, Trevor, and I have this thing. Why won't the government do federally backed loans for anything under $65,000 a year, $65,000 for a home? Why is that? Is it because of the risk? What would be the reasoning behind that? Or do you even know?
I don't know, because I honestly haven't given that too much thought before. But that's a great question that I can. What I'll do is I'll look into that, and I will send you an answer separately, and then you can share that with your viewers later on. But I think they would definitely provide more options to people, so. Yeah.
And if you here in Louisiana, believe it or not, every once in a while, you can find houses that are even $55,000, and people get really excited. They're like, oh, my mortgage payment would be so cheap. And I'm like, you can't get a mortgage on this house. They're like, why not? And I'm like, because it's under $65,000. You can't find a mortgage for less than $65,000. And they're like, well, how can I afford this? And they have good credit.
Mhm.
They just don't make that much, like they don't make their credit is perfect, but they just don't have like huge income. But if they were to be able to get a 30-year mortgage, that would be perfect for them because they wouldn't have to, they'd be out the rat race of renting a house, but they can't get a standard mortgage. And the interest rates on a loan that you would need for that is a lot higher. A lot
Yes.
higher.
Yep.
a lot higher. Question: how much do lenders care about the 2 years at the current workplace?
So 2-year work history is important. But one of the things that we look at, in fact, I'm working with an individual right now who's changed jobs 3 times in the last 2 years, but he's basically doing the exact same thing and the income hasn't changed. And so the consistency of the income and the job type is at times more important than the 2 years history at the same job, if that makes sense. So we want to make sure there's just a consistency of income over that period of time.
I had somebody who left his job and went to another job in the middle of the home process, buying a home. I'm like, what are you doing? But he was doing the exact same job for the same amount of money. So they were like, they just went ahead and let it go. I was like, you are lucky.
So that's I mean, that's in the situation I described. That's somebody I'm working with right now. We're in the middle of a contract and he's changing jobs. But the important thing was he talked to us about it beforehand. And so we had a lot of questions about that job that he was, switching to, the income for that job and those sorts of things. And so we were able to take some extra steps to make sure everything was okay. And at the end of the day, he's going from a job doing, basically even though it's 2 companies, it's almost the exact same job. The pay is almost the exact same. And so from a lending perspective, that's fine,
So you did see the news reports that like the interest rates have inched up quite a bit. And
Really?
of course the headline was like, interest rates have spiked. The drama of it all. I just don't see this like as and I mean, how high are we talking? What is the sharp raise? What was the sharp raise in this?
So interest rates have gone up almost a full percent over the last 3 weeks, just since the beginning of February.
So what are we at, 3% now instead of 2.5%? What is it?
So for a VA loan, we're looking at rates around 3 to 3.125, so 3.125, and on a conventional, somewhere around 3.5 to 3.875, 3 7/8 range, and it just kind of depends, and that's assuming a 740 plus credit score. So credit scores are going to have a factor in that, and it also depends on the size of the loan too.
So do you think this is going
to? We're still at historical lows. So
if you guys don't know, Trevor's also a real estate agent. Do you think this is going to affect housing prices at all coming into the summer?
I don't. I really don't. I think it might slow down the number of buyers in the kind of the middle income price range a little bit. And when I say slow down, if you have a house at 250,000 that's got, normally would have 20 offers within 24 hours, you might only see 15 offers come in.
I think the supply is going to go up some though. This is why, because, the numbers of the, I call it the pandy, have dropped drastically, and more people are feeling more comfortable because there's a lot more people that have been vaccinated. My parents have had both their shots. They did just fine, by the way. They made it through both those shots. The second one did make them feel a little crummy, but not anything to write home about. But I think the confidence of people putting their home on the market, which probably stopped them from putting on the market, is going to allow for them to decide to do that, because first of all, they know that they're going to get a lot more money than they could have, like even 2 years ago. So I think their confidence to put their house on the market and have people come through their home is going to be a lot more than it was, even 6 months ago. So I think that could be a thing. So Eddie has another article that came up. It was Home Depot warns for investors. So this was one of those things that was pretty interesting to read, because Home Depot had the highest record number of well, things that, for home improvement than they had in years. I mean, things you could never imagine, because everybody's home, they decided to improve their house. The thing that is kind of shocking is they will not release their numbers or their projected numbers because of the uncertainty of what's going to be happening in the housing market and housing supplies. So they won't release their numbers, what their projections are, and it will cause their stock to tank. But I thought that was interesting, very interesting, that they're so uncertain of what's going to happen with building supplies that they were willing to just not even release their numbers. Did you see that article?
Yeah, it's an interesting market right now, and I would have expected an announcement like that, last May timeframe, because nobody knew what was happening last May. But I think for where we're at, we're already seeing a certain more certainty, I think, in the market going ahead than what might be, what we had in the past. So that's interesting to hear that.
I feel that I was just saying, I was out shopping for the first time, and I don't go out shopping. I went to Walmart, and it was the first time I'd gone in there, and it seemed like everybody's attitude all the way around seemed a lot better. Like we already know the steps of how, like, what we need to do. We're getting it all done. There is light at the end of the tunnel. There wasn't a sense of like aggression in the air. So
yeah. I mean, so I don't think you mentioned this, or I didn't, but I'm also a pilot. And so I follow the airline industry, which has obviously been tremendously impacted by all of this. And so that's kind of how that's my gauge for how things are, I think, overall, because when travel is back to normal levels, that kind of is a strong indication that people, the economy is starting to recover. And right now, a lot of the airlines are predicting that by the time we get to October of this year, their pilot staffing should be back to normal levels, as in pre-pandemic. So to me, for the housing market, we'll see how that plays out. But it's good to see that, like you say, out in public, people it's just a different vibe that you're getting now when you're walking around. So
I bet you next year at this time, I bet the travel industry is going to be booming, because people are like, get me out of this house. Get me out of this house. But, in the past year, do you know what really boomed was within the country traveling? RV sales, RV and tiny home sales skyrocketed, because people are like, we're not going to stay at home. Why stay at home? We can take the kids, get in the RV. We could explore the world, because they're doing virtual school. What a great idea for kids. There's a few families that are doing that, even a real estate agent. So Eddie, do you have any other questions you want to throw up there real quick? Isn't it clear on real estate search websites how to search for manufactured homes in which they own the land underneath it? So, okay, here's a thing that you probably don't know, that most real estate agents in most states cannot represent a manufactured home unless it's attached to land. Now, there are some exceptions to that rule, but a lot of times if you're going into a manufactured home site, like a retirement site, and they have a salesperson, you would probably think of them as a real estate agent, and they may have their real estate license, but it wouldn't necessarily go through the real estate process like it would if it was attached to a piece of land. So that's the whole thing. If it is in the MLS and you see it on a website like Zillow or realtor.com, most likely it is attached to that piece of land and not rented underneath it. Yes, indeed. Okay, what makes the most rock solid buyer for a house? What makes the most rock solid buyer for a house?
Most rocks. That's a good question. I guess every seller is going to have their different motivations, right? So as a real estate agent, that's one of the things that if I'm representing the buyer before I write the offer, we want to ask that listing agent what's most important to the seller, because what you might think is most important, which makes you rock solid, they might care less about. And so ultimately it boils down, I think, to seller motivation. But go ahead.
Another thing is, if you represent a seller, like if I was representing a seller and there were two offers that came in, and the first offer was for $130,000 and they had a like rural development loan, and they were putting hardly any money down, right? Then you had another person that came in, and they were a cash buyer, and they were putting, and it was for 130,000, and but they were putting 20% down. The one that's putting down 20% is a stronger buyer because they already have the financial wherewithal to have saved that 20%. I would tell that person, go ahead and go with the conventional loan, even though the money might have been the same. I mean, even if this one was a little bit higher, just a little bit higher with the RD, they would have saved them more time because the RD loan is going to take longer to close and then the conventional loan. And this is a stronger buyer, but less likely to walk away, more skin in the game. So I would tell them to go with that specific buyer. But that, I mean, I would just give them the reasons why they can go with any buyer they want. That's their contract.
So that's interesting. And one of the things I'll point out is I see that a lot from agents when they receive offers from veterans that are using their VA loan benefits. Because with a VA loan, you can do a VA loan with zero money down. And a lot of times, I don't know if there's just a stigma associated with zero money down that a seller might assume, well, this person doesn't have any money. That's why they're having to get a VA loan with zero money down. But VA loans actually have, the lowest default rate of all loans that are out there. And the buyers in general, a lot of the buyers, they have the savings, but if you have a benefit that allows you to buy a home with zero money down, especially, last month when we were at 2.5 or 2.25% interest, I'm going to do that all day long. Like, why would I put 10 to 20% down when I don't need to? But I think to your point, Kristina, with those offers, that rock solid buyer is maybe putting a larger deposit, like you said, that they could then decide not to use when they go to close, that they don't need to, but they're at least presenting the fact that they have those funds.
There's all sorts of other ways that we can tell if it's a good offer or not. I mean, even let's just say some people, they don't understand this. They're like, I offered like full price. I'm like, you did? And they're like, yeah. And I asked for some closing costs. I'm like, how much did you ask for in closing costs? Well, $7,500. I'm like, then that's not full price. If it was full price to the seller, you would have had to offer, $137,500. Then it would be full price to the seller. And sometimes people can't wrap their head around that. I'm like, Their bottom line earning is they still have to deduct that $7,500. It isn't magically coming out of the air. That comes out of their bottom line. Sometimes buyers can't understand.
Yeah,
they're like, I gave them full price. I'm like, no, you didn't.
We had 3 offers come in on a house I listed last month. And one of the offers was $1,000 over the asking price, but they didn't ask for any closing costs. And the other 2, they went $4,000 or $5,000 over the asking price, but they were asking for $4,000 or $5,000 in closing costs.
Mm-hmm.
And so at the end of the day, it's part of it's, what's the bottom line? And then it gets back to, well, if the buyer needs money to help pay the closing costs, then I start to question how much money they actually have to qualify, or at least the seller starts to think about those sorts of things. So again, rock solid buyer, you want to come in as strong as possible from the beginning.
Is there a tax credit for first-time home buyers? The Biden thing. Okay, so this hasn't happened yet, but I'm sure you've seen it, where there is a proposal that had happened prior to him being elected, that he would give first-time home buyers $15,000, which, if you're a first-time home buyer, you're thinking, well, that's a fantastic idea, but it's really a terrible idea. And I'm all about giving people money. Don't get me wrong. And we had done this tax credit thing before, but the market at that time, when Obama was in office, the housing market was awful. We had foreclosure city. I mean, there was just a sea of foreclosures, and they wanted to get as many people in houses as possible. This time, what makes this $15,000 tax credit or terrible idea is there is no supply of houses, and first-time home buying homes are nearly extinct. There is no house that's under like 200 to 300,000. Now the average price for like the average American home is over $338,000. Average American home, first time home buyer, like There's no way. That's just crazy. So really the first time home buyers pretty much been priced out of the real estate market. So if you're going to give them an additional $15,000 on a market that's already like suffocating with increased prices, that's just going to increase those prices even more. So I think
I'm going to agree. I agree with you 100% on that one.
yeah, that was like, what a dumb.
It's not necessarily like it sounds great in theory, but at the end of the day, it's ultimately not really helping you, although you might think it was.
No, it really did help in the 2007, 2008 when they had come up with those. It really did help, like with a lot of real estate agents that were sitting on their butt once they came out with those, like, oh, people are starting to buy houses again. Thank God, it did help. It helped, but I've heard other agents that have come on the show say that they should really honestly, to incentivize sellers to put their house on the market, offer the $15,000 tax credit to the sellers to incentivize them to sell their houses. And that would work. I don't think that's a bad idea.
And anything that we can do to increase the inventory right now.
Yeah. I don't know. I think that more people are going to put their house on the market. I know that some home builders have been saying that they're feeling a little bit more confident about building now. The supply chain of materials like lumber is no longer squeezed as tightly as it had been before, and they're willing to do more spec homes than they had in the last year. So I think by the end of the summer, things are going to be looking a lot different. But I'm a little concerned that in 3 weeks, the mortgage rates went up a whole entire point. That does make me a little nervous.
Yeah. So we could talk about that a little bit, but basically anything underneath 5% is historically,
oh yeah,
at all time lows, right?
Mm-hmm.
Last year, we were seeing kind of through summertime all the way through really the first week of January. We were setting record lows. In fact, the week that ended December and going into the first week of January, that was by far the record low that we set for mortgage rates in the industry. And a friend of mine, he said, it's kind of like if somebody brings donuts to your house every single day, right? You're like, man, I love my donuts, right? But then after 6 months, they don't show up. You start getting mad, like, where are my donuts at? And that's kind of how we were with interest rates. Interest rates, everybody just got used to interest rates being down in the 2s, in the low 3s. And all of a sudden we see this bump up a little bit and the whole world's freaking out over it because like, oh, what's going to happen with interest rates? And it's like, we're still in the 3% range, so it's going to take a lot more to move things in terms of the housing market. But to your point earlier, I do think eventually it will help with some of the supply issues.
We bought our first home in 2002, my husband and I, our first like actual house. And we got an interest rate of 7.5%. And everybody's like, you guys are so lucky. Wow. I've never even heard anything so low. And I ran into another person and she's like, my interest rate, she goes, I really need to refinance because my interest rate is at 11%. Oh, and I'm like, yeah, go ahead and refinance. She goes, yeah, I'm going to do that. I've never heard anything that low. And then she refinanced and then like a year later it was at 6.5. She was like, I could have saved another percentage. I'm like, yeah, but you still did really well. She was like, after that, we ended up remodeling our kitchen.
Yeah. And we've actually been interest rates that have been underneath 5% probably since I want to say like 2013. I'd have to go back and look, but it's been several years where we've been under 5. Now, for a while, we were hovering right between 4 and 5. Mm-hmm. Yeah, we're just at a record low, and it was a rapid move. But in my opinion, it was kind of just the natural course of things to see just a slight correction. Not even back to where we are historically at normal levels, but just a little bit higher than what people have used to been seeing. So.
Yeah. So Allie says, question, what do you think about printed house technology compared to traditional? Well, traditional is just that. There's lots of things that are great about traditional housing because it's been the tried and true and everybody knows how to do it. But because of that, they've always had their fair share of problems. I personally like different versions of manufactured housing and 3D housing because it's an innovation process. They're not taking something old and trying to make it new. What they're doing is basically really reinventing it to make it better all the way around, as far as energy efficiency and sustainability and weather conditions, mold problems. They're really just basically taking the whole traditional view of building a house, throwing it in the garbage and saying, we're going to do it this way. And this is why. So I like the idea of 3D printing houses because it does explore all of those different avenues. But just like anything, it has its time and place. It's going to take years before we ever see that type of industry basically wipe out the traditional way of building a home. As much as I'd love to see it, I'm actually thinking about going. There's a manufactured home, a modular home company that's doing a socially distanced touring of their modular homes, where they're basically, you're going to watch them put together the walls and everything, and how they like basically put them together in like a few hours, and it's going to be wild. I want to go see it.
It's so much less waste too, right?
Ton more.
You can basically recycle any of that excess and goes right into the next printing.
Yeah, well, this is the same with modular as well. It's not very common here in the United States. It's much more common in European countries and colder climates because of the fact it's almost impossible to build during the time that it's cold outside. So like your countries like Norway and Sweden and stuff like that, they have modular homes. That's commonplace because they build the houses in the factory. You pick out your house, in the winter time, and you say, this is where my house is going to be. And by the spring, they just come in there and they just start sectioning it all out because they've already built the walls and everything. And that's it. It's done. You have your house by the end of the weekend, but they've been building it in the factory all winter long. And then it's just ready to ship by the spring. And then you have your house before the summer. It's wild. It's wild, right. But it's common. It's commonplace. All right. Ronald W. says, in this market, should I do paint carpet on selling my house or do credit? I'm not sure. In this market, should I do paint carpet on selling house or do credit?
I think he's asking, should I go ahead and fix that stuff up, replace that stuff, or just give a credit to the buyers?
I'd fix it. There's just no honestly, you always want to get top dollar for your house. It doesn't matter what market you're in, even though you could probably sell your house at just as fast as you could if you didn't do those things. Wouldn't you want the most money you could possibly get? So if you put in, let's just say $500 worth of carpeting in an area, and it would give you back $1,500, doesn't it make sense to do that? Carpet and paint as the cheapest ways to increase the value that will give you some of the highest return. Just do it. It isn't that expensive. Realtor is giving me price for my house. How do I determine is it a legit price? You know what, Ronald? You know what you can do? Contact 2 real estate agents. Call one, ask them to send you a CMA. Go to another real estate agent and say, here's my house. Can I get a CMA from you? Totally different company, everything. See what they say. Compare the 2 values. And then if you don't even like those answers, call one more and have 3 of them sitting in front of you. And I'm not joking. Have 3 of those numbers sitting in front of you. If they all line up, then you know what? That's probably the price of your house. Yep. Question: how can someone compete with a cash offer when appraisals are not updating with the market? In LV, competing with Exodus and California cash offers feels like I will never get an offer accepted. What do you want to say? Do you have anything to say about that?
So appraisals should be updating with the market, because an appraiser is going to look at the most recent sales. So as homes sell for more and more, that appraisal should adjust for those factors. I think in certain markets, like I was talking to somebody from Seattle, they're seeing stuff go, $40,000, $50,000 over asking price. That's where you're getting kind of out of the range for where an appraiser might be able to make that justification. But yeah, it's a tough question, and I think or a tough problem to have in certain markets. are going to be more challenging. But for the most part, appraisers should be taking those things into consideration.
Well, I think her biggest problem is that she's competing against cash buyers from California, because like what they sell in California, let's say for $650,000 in California, would be just a pretty average, kind of boring, basic house.
Yeah,
and then here it would be like a mansion. $650,000 house gets you a pretty nice house here, no lie.
Yeah, so that's kind of what's happening, right? Where like, let's say a house is listed at 300, you got a cash buyer that comes in, and they don't want to worry about competing with everybody. So they'll say, hey, I'll pay you $350 for it and all cash, so I don't have to worry about an appraisal, right? So they're going to be more competitive than somebody that's going to require a loan, that requires an appraisal, because the seller might look at that and say, hey, maybe I've got two offers for $350. One's a cash buyer and the other one requires a loan. I don't know if my house will appraise for this much, so I'm going to go with the cash buyer. And that's, I think it's tough, right? But hopefully that's answering the question. But I think that's a concern in certain markets where these cash buyers are coming in with legitimately all cash. I know realtors sometimes refer to a cash buyer as somebody that's still using a loan. It's like, no, a cash buyer in my sense is somebody that's wiring you the funds that has all that cash.
I used to tell people, which you can't do anymore, is to write what I call, well, some people call it the love letter. And I was like, I call it the help me letter. And you would write out a letter just saying, like, look, I've been, this is my 5th time trying to buy a house. I'm on my own. I have 3 kids. This is the school district they want to live in. My daughter's part of the cheer squad. You basically throw your heart and soul into this letter, and you would hand it off to the sellers. So hopefully they would take your offer, even though it may not have been the best offer, over the other people's, which people used to do. And it did work, but you can't do it anymore. In California, they're flat out saying absolutely not. So they say it's against fair housing. So they say that people could reject an offer or accept an offer because of fair housing problems. So no more love letters. So I don't know what to say. So does it make sense to do an appraisal on the house I'm selling to get the best real world price for my home? No, you don't need to do an appraisal. You just, like I said, call those 3 real estate agents in 3 different offices and get their opinions, and have them just send you what they call a CMA. Have them send that to you, email it to you. You don't even have to meet with them. And then that will give you a roundabout price of what your house is worth. And then you can compare the 3. And then you can see which real estate agent you like dealing with too. I wrote a letter, lost 10 offers. I can never be selected in Vegas over California mass exodus cash offers. And you know what else that, Samantha, I know it's terrible. It really does suck. But I really believe that by the summer, we're going to see a supply increase. By August, I think there's going to be a lot more houses on the market for us to choose from. And I feel your pain, because I have a lot of real estate agent friends in Austin, Texas, and in Houston, Texas, and some people in Phoenix, Arizona. And they all say the same thing. California buyers are ruining the market, because they're just like, well, I'll just offer $30,000 cash over asking, because they have it. It's easy for them. It's like play money. It's like play money. Eddie, you want to throw up another question, or there isn't any? My people aren't really chatty today. Is there a football game?
Well, I'll tell you this on the interest rate side, I think is a helpful tip. So
okay.
We've been seeing, kind of the interest rates spike up lately. One of the things that I've been mentioning this on social media, and people come back to me and say, well, my bank said my interest rate is still at this rate, and they mention a much lower rate. And it's important to realize that if you're in the market to buy a house right now, whatever interest rate you're seeing on your bank's website or a lender's website, click on the disclosures and start looking at all the caveats associated with those rates, because almost every single one of them is going to have some caveat that basically says this rate may no longer be valid, or and it's frustrating sometimes, because lenders, they get a bad rap, and people are like, Trevor, like, you're full of it. Like, I can get a lower rate somewhere else. I'm like, really? Go ahead and call them up today, and let's see how that works.
So are they doing the bait and switch kind of thing on their websites?
So like most big companies, right, that have advertisements they run, they create an advertisement and they plan it to run for 60 days or for 3 months. And so they'll put a rate on there that's what I call a teaser rate. And all the caveats basically absolve them from, any sort of, from having to honor that rate basically. So something that they started back in December might have been valid at the time it was written for that advertisement. But if they haven't changed it now, here we are a full percentage higher. And they're not going to go and be proactive about updating their rates to show that they have higher, because they know that by keeping that lower rate in their advertisement, they're going to appear to be much better than other offers that are out there.
I don't like that. I don't like that at all.
The big things to watch out for is almost every single one of those interest rates is based off of a 15-year mortgage, or it's based off of an adjustable rate mortgage.
Right.
They almost always include paying discount points, so buying down that interest rate. So for a $200,000 loan, 1 point would be $2,000, and that'll lower the rate just a little bit. And then they include typically you have to have at least a 740 credit score, and you typically need to put at least 20% down. So there's at least 6 different criteria you've got to meet just to get close to it. And you're like, hey, I meet all those criteria. And then they say, well, actually, this rate is no longer valid because it was only valid at the time this advertisement was written. And, and then you.
But you said something. You said something really interesting. You said adjustable rate mortgage. People don't realize that that product still exists. You may not have stated income adjustable rate mortgages, but there's still adjustable rate mortgages, and they will always exist. That's still a product that exists. People think that because what would happen in 2007, well, they don't offer those anymore. The hell they don't. They do, sure do.
They do.
Question: What is happening in the summer to make you think the inventory will go up? So, Smith, you may have not made it at the beginning. So, I'm saying consumer confidence to put their house on the market has changed. There's a lot more people that are like, well, people are getting vaccinated. The rate of infections seems to have dropped drastically. You know what? Maybe we should go ahead and put our house on the market. A lot of home builders as well have said, well, we were unsure of what was going to happen in 2020. We didn't build as many homes or speculative homes that we wanted to, because lumber costs were so high. Building supplies were hard to come by. So we just didn't do it this year. We're going to go ahead and jump back in 2021 and build a lot more spec homes. So I'm thinking by the end of August, I'm not saying that, is it going to be like a flood of new houses on the market? No, I just think that we might start seeing, because this is ridiculous right now. This is, honestly, the housing market right now is just stupid, what people have to do to get an offer accepted. So I just think that we might see a little bit more realistic type of contracts getting accepted, not, like what I'm saying.
Well, and interest rates are playing a part in that too. So basically for that 1% rise that we've seen on a $300,000 house, that's about $150 a month extra on your housing payment for somebody. So somebody that was borderline qualifying for a house may no longer qualify based off of that change in interest rates. And when you're working with a lender, we typically can't lock that interest rate until we have a contract on the house. So that interest rate is subject kind of to market conditions until
they have a contract. That's right. So, question: you mentioned a 300% ROI on paint. What else gets you more than 100%? I said it could. That isn't marked in stone, because I've seen some pretty crappy paint jobs and they pick the wrong color paint. And So your best places to put in money is updating your kitchens and bathrooms. Some of the simplest, easiest ways to get a return on investment is paint and cleaning and carpets.
Some sweat equity out in the front yard with curb appeal.
Oh my gosh.
I mean, it's amazing how much of a little bit of physical labor can transform, your house for really a couple $100. It's just somebody driving by. You're getting that many more buyers to walk through the front door.
Yeah, fertilize your lawn. Get some annuals, really bright, colorful annuals that will be a differentiation in color to your house that pop. Oh, people love that. They go, oh my gosh, that's so sweet. Oh, and another thing that people don't think about, if you have a mailbox in front of your house and it looks super janky, go ahead and replace your mailbox, or at least paint it with put some fresh bold numbers on that mailbox. Big difference to a buyer's eyes. It may not mean anything to you, but buyers notice that stuff. So yeah. Question: 760 versus 820 credit score. What makes the difference regarding interest rates? Go for it. That's you.
I love this question, because this is a question I get all the time, because people get frustrated. They're like, I have an 800 plus credit score. What's the best rate? And I tell everybody 740, anything above 740, it's all the same. I really wish there was a bonus that people got for having an 800 or higher, because that would make some people so happy, because they feel like they've worked really hard. They've been responsible, with their credit, and they've earned that score. But at the end of the day, 740 and higher, it's all the same. There's no difference. So
you as a lender should give those people an extra something. Like you should have mugs made, like the 740 and over club. And so you should have the cups you've made it, like only the people that have a score over 740 and above get this mug, and have your face on the other side making a goofy look.
Print out your credit score certificate and hang it on the wall.
That would be so funny, because I get that, like, my husband didn't have like an over 700 when I met him. And when he got to that point, it was like, we kept checking his score all the time, This is when we were very young. And so when he got like over that amount, and then he got up to like 760, we're like, oh, look at us, we're functioning Americans now.
And here's something to keep in mind too. So a lot of people, they'll come to me and they'll say, ask me, well, what do you think your credit score is, or how's your credit? And they're like, well, it's pretty good. I got a 750. Well, then when we run the credit, that score might come in actually as a 730 or even a 720 sometimes. And then they say, well, how's that possible? Because I'm looking online and it's showing me, I ordered my credit report and it shows this score, and you guys are telling me it's this much less. And the reason why it's always going to be different is because lenders use basically a tri-merged credit report, and it's kind of a different level of criteria than what a credit card company is going to use, right?
Right.
So your credit score may qualify you to go get a car loan or get a credit card, because if you default on a $5,000 max balance for your credit card, the credit card company is not that big of a deal. But if you default on a $200,000 house, that's a much bigger deal. So lenders are going to use a little bit different set of criteria to score or to evaluate your credit. And at the end of the day, it's ultimately going to favor the lender in terms of the scoring rather than the borrower. So whatever number you're seeing, just assume your lender is going to come back about 15, 20, sometimes 25 points less. So
it's kind of like getting those 3 CMAs. Yep. They get 3 numbers and pull them together. Question: can lenders trick you into signing for an adjustable rate loan? What should you watch for to make sure it's a fixed rate loan?
So it's illegal for them to do that.
Yep.
Due to the Truth in Lending Act and other things that came out of the 2008 financial crisis, a lot of the somewhat unscrupulous lending practices came to an end. One of the things that you want to watch for is, when you get your initial disclosures, it should specify on there what type of loan product that it is. And a lot of times what I see is, we're in this age of electronic signature. And so everybody gets pushed their documents and DocuSign. You just click, 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 right? Because nobody wants to take the time to read through 60 pages of loan documents. And I would just encourage you to, when you receive those documents, before you click through and sign, call your lender and ask them, hey, walk me through everything that's on here, because that's what their job is to do. They may not be happy of doing it. I'm happy to do it, but there's a lot of lenders who don't want to do it. But have them walk you through so you fully understand. If you're in a situation where you don't understand anything about the paperwork for your loan, you need to either have the lender explain it, or I would go to another lender if you're not comfortable with how they are explaining it.
I always say, even before you even to start doing paperwork. like just like your real estate agent, interview 3 lenders as well. Like you don't, you're not stuck with one just because that's the first person you walked into. You can always get another one.
And
Oh,
honestly, I haven't seen too many lenders that are pushing adjustable rate mortgages.
I haven't either, unless you're an investor and then you plan on reinvesting in a later time. I've seen that. We've done it ourselves. I gotta show you. This is my doggy cam. I don't know if anybody knows this, but every time I do a live stream, generally there's dogs sitting right here, and I put the doggy cam up so that you guys can see my dogs that hang out here. But today they're being shy. I was all excited to show my doggy cam. Question: do you think that when rates go up, prices will stay the same or keep going in Vegas? If so, it will be hard to find for anyone to find an affordable mortgage or be able to afford a mortgage. This is true of everywhere. Honest to God, it is true of everywhere, because the average American income has not risen to the level of an average American cost of a house. It's so skewed off drastically that it's going to be to the point, if it doesn't, even out, that we're going to end up being, the middle class will be a rental group of people. As more and more people enter into the middle class, they'll still won't be able to afford a home if prices continue this way. The increase in home prices, I cannot see it sustaining itself at the same level it did last year. It was a frenzy. It's going to level out. It's not going to go as high as it did this past year. I don't even know how it's physically possible. Now, some areas will still see that increase. I still say, unfortunately, Las Vegas, you're going to look at places in California, Austin, Texas, even around New York, outside, the city area. It's going to happen. And even in the city, I was talking to some real estate agents that, like, during the pandemic, they were like, oh my gosh, this is terrible. Everybody's moving out of the city. But like during those quiet times, that's when a lot of investors were like, good, I'm getting deals. So they picked up the deals, and they're back selling houses just like they were. And those apartments are getting picked right back up again. So, people are going to go back to the cities. Evelyn says, I heard credit scoring may change due to the effects of COVID. They may be using a different source that Experian or Equifax. This is a question for you. I don't know the answer to this.
Nothing, as far as I know, is changing in terms of credit scoring due to the impact of COVID. The one thing that we have seen is for most lenders, they're now doing 2 verifications of employment. So when you apply for the loan, they're going to verify that you have your job. And then at least for us, we're re-verifying that 5 days prior to the closing, just to make sure that due to COVID, somebody didn't, get furloughed or laid off in that time. But lenders should still, all the credit scoring sources and models should all still be the same from what I've seen.
They did that here. They've always done that here. I've had people that, like, literally the day of closing thought that they were going to get away with buying a house, even though they got fired. And sure enough, the title company always looks it up. The title company was like, yeah, you don't have a job. You can't buy this. That happened to some clients of mine. I couldn't believe it.
Save yourself the trouble, save your realtor the trouble. When you go under contract for a house, don't go out and buy a new car. Don't quit your job. Don't open up 3 new credit cards. Just keep everything the same all the way until the closing.
I've told this story before. My husband and I have excellent credit, and we were buying a house here, which we were putting down a substantial amount of money. I mean, like more than 20%. And even still, we went and got a refrigerator. And we put it on like a new BJ or whatever. The company was called BJ's over here. Right. And it was a warehouse store. So we went ahead and bought this refrigerator. I didn't think anything about it. Honest to God, didn't even think a thing about it, because we had the money. And they were like, we're not sure if we're going to be able to close. I'm like, why? And they were like, you pulled out new credit. And I'm like, Like I was so perplexed by that. But then they were like, no, you can't do that. And as a real estate agent, I should have known better. But I didn't think anything of it because our credit was so good and we were putting down so much money. But apparently that was a problem. They let us close, but they gave us a little thing.
Yeah.
Question: my lender has had me pay off very specific amount on my cards, no more, no less, and they got my credit up 33 points in 2 weeks. How is that possible? Go ahead. I know the answer to this, but go ahead.
Well, so your credit score is impacted by a number of things. Typically, what we see is if you are maxed out on your balances, simply paying that off to, basically only using up about 20% of your available credit or less is going to make a dramatic difference in your credit score, as opposed to completely paying off that card or that loan, if you will. So is that the answer you were going to give, or you have a little different take on it?
Well, and like the reason why he had to do it at like a specific day is because it has to do with the amortizations. So that way it makes your credit score go up as well. So that's why he was like, you have to do it today because tomorrow your amortization will be different. So yes, do it right now. I've seen them do it. I'm like, boy, oh boy, this is like playing chess for crying out loud.
And if you're doing this, I would recommend, even if you pay off that card, don't close it out. So just right. Leave it open because you want to have that credit history, and it's better to leave it open with a zero balance in a lot of cases than to close it because you think, hey, I'm doing a good thing. I'm closing my credit out. The lender doesn't have to worry about it. But actually leaving it open with a zero balance shows more responsibility in terms of that credit. So recommend keeping those open.
Question: are you guys seeing an increasing in financing and flexibility from traditional lenders for alternative houses such as 3D container homes and domes, et cetera? No, Bart, honest to God, I wish. That's my whole problem is I don't understand why there isn't more alternatives in lending as there is alternatives in homes. Matter of fact, it's almost like I feel like people that are looking for alternative building are being punished by lenders for not doing the traditional way of buying a home. You generally have to spend more in interest rates to buy these houses that are more energy efficient or cost effective. It ticks me off, to be honest with you. Question: would you recommend a fixed or open mortgage? I'm in Canada, and I'm assuming an open mortgage would be like a what is adjustable rate? I'm assuming.
I'm guessing. I'm not familiar with if that's a Canada product.
Canada. Let me look. I'm looking this up. Open mortgage. I'm going to let this. We're getting education today. We're getting open mortgage defined because I want to know. This is a new word to me. Open mortgage is an open-end mortgage allows borrowers to borrow additional. Oh my gosh, the pop-ups. Why did they do that?
Why did they do that? I think I know what they're referring to. With.
I'm trying to get this thing to work because I have the stupid pop-up.
So sometimes we have these, construction to perm loans where, you start off with a certain loan amount in mind, but you can add on to that as the house is being built and the builder is taking certain draws out of that. And then the product transitions to a permanent fixed loan at the end of everything. So in that sense, it's kind of open because, as that, maybe you decide make a building change, with the house, you're working with the lender and the builder to go through that process. But typically there's not a lot of lenders that do those types of loans anymore.
Well, I learned something new today. I've never heard that before. As a buyer, is it worth working with a seller's realtor so they can pick your offer as will be double dipping on commission? Alberto, I do not represent both sides. I will not do it. I either represent the buyer or I represent the seller because I'm trying to fight for that person as much as possible. When you work both sides, you actually are a neutral party. So you're not really helping anybody. You're just facilitating paperwork at that point. And if they're using that give you a little discount if you do this. how hard is they going to actually work for you to represent you to get you the best deal? Eh,
Yeah.
Probably not. That's not in their best interest. All they're doing is trying to facilitate paperwork. That's it. They just want that extra commission. This is my
Yeah.
opinion on this. I
I'm,
would
I'm
just
not,
say
I'm not a fan of those either. And I won't do it either. It's,
I absolutely refuse.
because if
In
you're,
some states, it's not legal.
yeah, and if you're being fair about it and honoring what you should be, and if technically you are representing both parties, and let's say the seller says, "Was this a good offer?" Your answer should be, "I don't know. What do you think?"
I
And that's
know.
your answer. That's your answer to every question. Is you can't give advice, because now if you
Nope.
give advice, you're not representing the best interest of one party over the other.
Exactly.
And I never want to be in that situation. I never want to put one of my clients in that situation either.
I feel like I'm like the person in front of the money. So I want I want to fight for those people as much as possible. I want to represent one side so I can fight for them to like either save or make as much money as they possibly can. If you represent both sides, you can't do that.
Yeah.
That cup is ridiculous, lady. Actually, you think that cup is ridiculous. I actually occasionally give cups away that are even bigger than that. And my branding is Your Real Estate Whisperer, and it's a giant gumbo cup. And yes, I realize my cups are absolutely huge, but I like big cups and I cannot lie. You know? Question: have you heard any recent buyers that were caught up in the emotion now regretting their purchase? Any advice on what to look out for as a buyer since everything is so rushed? Okay, I have advice. I would say I have heard only one person have buyer's remorse because they ended up buying it in an area that was further than where they wanted to be from their family. But they were so in love with having a house that now they regret it because they had to, do a little driving. But if you have the money and the wherewithal to do it now, and you got in at the 2% interest rates, you can't really, you can't really like be that upset about it. Just let it go. It's like gambling. Like sometimes you win and sometimes you lose. Question: so is it better to pay credit cards down and not all the way off to boost your credit score, or should you pay it off if you can? Go ahead, Trevor. Let her
So
rip.
in terms of the credit score, it's typically going to be better to maintain a balance on there where you're making the minimum payment. But in terms of your financial position, that's obviously costing you interest, right? So are you going for a slightly better credit score, or a better financial position for yourself and for your family? And it's really going to boil down to a personal decision. I think the difference between a credit card having maybe a very small balance versus paying it off completely is not going to be huge in terms of the improvement to your credit score. So I guess I would say pay it off, unless you're right on the edge of trying to, maybe you're at a 720 credit score and you're trying to get to that 740, so.
Here's a question for you. So say you have, you've had a Sears credit card, you have a Target credit card, and you have a Chase Manhattan credit card. And you've had these probably since you were 20 years old. Is it, even though you've never used them and you're about to buy a house, would it be smart for you to close a couple of those credit cards, or should you go ahead and keep those open?
I recommend leaving them open. Now, the one thing you can do is look at your max credit limit on each of those cards, because typically over time, the longer you stay with them, they'll keep raising that limit to try to entice you. Oh, I can go spend more money now. You can always call that credit card company and say, hey, can you change my max limit and bump me down? Maybe you're at 15,000 and you only want it to say 7,000. That is going to help and better than closing the card, because now it's a smaller potential liability. It doesn't negatively impact your credit to make that change. And you continue to keep the card open and show responsibility with the account.
That's what some people don't realize that. So I'm glad I thought of it, because I almost did that myself. Question: what is a credit stimulator? Realtors use it to see what activity will benefit your credit most, because I want it. A lot of laughs. A credit stimulator?
Simulator?
Simulator? I'm saying stimulator.
Wait a minute.
Anyway, simulator. I have no idea. I've never heard it, but all I know is right now I'm about the shade of red. Credit simulator. I don't have that. I don't know what that is.
Yeah, I'm not sure what the what kind of stimulator realtors are using either. But
I'm like literally sweating. Not funny. I don't care if you don't think it's funny because I'm dying.
that's great. That's great.
On that note, since I have literally embarrassed myself to nth degree, I want to say thank you so much, Trevor. And if you haven't yet, everybody, if you thought it was funny, you give me a thumbs up, even though some people, Mr. Live didn't find it funny. I don't care. I thought it was hysterical. It was hysterical. Thank you, Trevor. And Trevor has a YouTube channel as well. Why don't you tell me what your YouTube channel is, Trevor?
The Mortgage Smith Team.
The Mortgage Smith Team.
Yep, Mortgage Smith Team, and we're happy to share information. That's really kind of like you're doing. We're just doing it from the lending side, and we're just getting started. So we're looking forward to provide more content in the future.
Yay! Thank you, Trevor. Thank you for dealing with me.
Oh no, it's been awesome. Thank you so much. Appreciate it.
All right, everybody. After this is over with, since we're going to close this out, if you have any more questions, go ahead and put them in the comment section of this video. I'll try to answer as many as I can. Trevor will check back on this video as well. And so if you have any mortgage questions, he will answer those in the comment section after this is released. Everybody, you have a fantastic Sunday. I want to say thank you to all of you. And don't forget to hit the subscribe button if you haven't yet. So long, farewell, Avitas, and goodbye. Don't get too stimulated. It's not that good. Bye. Is Eddie going to end this? I think he ran away. I'm going to end it for him since he